Hello guys, welcome back. The CPI from US is tomorrow, okay? Pay attention. CPI for USA is tomorrow and is set to place a lot of volatility into the market. Not only the CPI for USA, but as well the GDP for Europe and the CPI for France, okay? So I do have all the data here in front of me. I want to discuss a little bit of what I'm expecting, from this data to collide into the market in tomorrow, Wednesday. But before we start, guys, just reminding you, everyone here, that tonight we have, this afternoon we have the webinar from 5 to 6 p.m. on Australian time. So if you haven't yet registered to the webinar, please do it so by going to the description of this video and click in the link for registration. All right. So, okay, let's have a look here on the economic calendar for tomorrow. So we have the RBNZ, the Reserve Bank of New Zealand, interest rates decision, okay? So the consensus is that no changes at 5.5% from, of course, the previous was no changes as well at 5.5%. My expectations is that, yes, they will have to maintain the rate as it is at the moment, okay? Just because inflation is looming in a sense for New Zealand, and to be honest, New Zealand is one of the most affected countries still because it's an island and it's a very small island. So the Kiwi dollar, the New Zealand dollar is yet to suffer some consequences for the economic disaster that we had last year in 2023. Therefore, I'm expecting the New Zealand Reserve Bank to maintain the rates as it is, no changes. Not looking to hike any soon, but yes, looking to cut maybe in the first half of next year, 2025. All right, going ahead, we're going to have CPI for UK, 2.3%, the month over month, year over year, 2.3% from the previous of 2%, so expected to have a 0.3% increase in inflation from the July last year to July this year, so 1 year. And the CPI month over month has no consensus yet, has no expectations, but the previous we know that was 0.1%. French CPI is expected to have no changes. A bit of a strange consensus, I would say, as of we did have the Olympics, and there was a lot of spending on the Olympics. I can guarantee you that for sure. A lot of tourists coming into France and having the money spent in there, buying some gifts for family, flying over again overseas. Just a reminder, the Olympics have been wonderful, and Australia, congratulations to Australia. We've done a fantastic job on the Olympics, securing, I think it was 18 gold medals, 16 bronze, and 12, if I'm not wrong, maybe it was 12 bronze, I'm not too sure, but congratulations for everyone that participated on the Olympics from Australia. Now, so a bit strange because all of these retail sales that we're going to have on French is not going to affect the CPI. It's a bit strange on that side, but I'm expecting it to be a very curious one. And of course, we have GDP year over year quarter two for Europe, and quarter over quarter, year over year quarter two, and quarter over quarter two, expected to be 0.3% from the previous 0.3%, but the year over year quarter two is expected to be 0.6% from the previous of 0.4%, so an expectations of 0.2% higher than expected, higher than the previous. I do understand this GDP, so I do think it's a good number to have it on the on the outlook. And then the big man, the big boy, the one that everyone is expecting, as I was talking yesterday on the video, the CPI is influencing the Fed, is influencing the market to precipy a 50 basis point cut. So if you haven't yet watched the video, please do it. So pause this video, go into the channel and watch that video that we've just posted yesterday. So To back up my decision to think why the Fed will cut 50 basis points, yes, I'm expecting the CPI to come lower than what is expected from the market, occasionated a weaker US dollar and generating a good long opportunity on the euro dollar. All right, so this is my take for the euro dollar, as you already know. But if you want to know more about my opinion on different pairs and what can we expect actually from the CPI, tonight, 5 to 6 p.m., I'm going to be live on the webinar. I'm waiting for you. So if you haven't registered yet, you already know how to do this. Go in the description, click on the link, and then you're going to be redirected to the registration page. So yes, the CPI month over month is expected to be 0.2% from the previous of negative 0.1%. And the CPI year over year, July, is expected to be no changes at 3% from the previous of 3%. But what the Fed actually cares is from the core CPI, is that where they can actually take care of the CPI, the inflation. And the core CPI month over month is expected to rise. It is expected to have an uptick of 0.2% from the previous of 0.1%, so 0.1% higher than expected, higher than the previous. And the core CPI year over year is expected to have a small decrease from 3.3% the previous to 3.2%. Guys, thank you so much to stay with me until the end of this video. Please subscribe to the channel, give us a thumbs up on this video and share this content with your friends. I hope I could bring some knowledge to you and now you can make more informed trading decisions. Again, I see you tonight or I see you in the next video. Bye-bye.